Nice to have you here. The stock is getting hit pretty hard, even though some of the analyst reaction has actually been quite favorable. Was it that the expectations were higher because of the online nature of the business than what you actually saw?
I think it's hard to ever know exactly what's driving the stock, and so we try to stay focused on the business. I think, obviously in the late first quarter, we saw sales across the industry drop by 70, 80%, give or take. We were still able to grow at about 40% in the first quarter. Things have been going great so far in the second, so we're really pleased with how we're hanging in there, for sure.
What about the fact that you do have this online business and can now deliver cars to your doorstep? I mean, do you expect that to ultimately give you an edge to help turn these numbers around?
Definitely. So I think, as I said, across the industry, sales dropped very dramatically. I think many people at this time just aren't thinking as much about buying cars. We've seen that across retail and definitely in the automotive industry. I think the other thing that's happened is people are much more interested in going online and buying things in a way that is safe. For the last 7 years, we've built this business to give customers a great experience where they can, go online, buy the car, speak to customer advocates that give them an incredible experience, get a broad selection, a low price. And I think that same business model also serves this time very well because customers can buy a car in a way that's safe. And so, we've seen the number of people expressing an interest in buying cars online roughly double in the last couple of weeks. And I do think we are likely to be a beneficiary of that trend.
I don't think you've seen a profit since IPOing back in 2017. So there was some concern about your cash levels, but you were able to raise some money in the markets. Just bring us up to speed on where that stands.
Sure. So we've got about $1 billion of liquidity today, so we're feeling great about that. We've been building a business that's grown. It's roughly doubled 6 years in a row. So it's grown very, very quickly as consumers have moved from buying cars at dealerships to buying them online. Our expectation is that this new world will likely accelerate those trends, and so we've been investing in the business to give customers that experience across the country. And today we're very excited to be announced that we're opening 100 new markets to provide this same offering to customers in many more locations, as there's been so much demand for it recently.
Hey, Ernie, it's good to have you back. We talked about the model early on in your public life. Now that we're dealing with conversations that involve potential dealer consolidation, to what degree does that become a tailwind for you? How can you leverage that?
So, this is an enormous industry. There's 40 million transactions per year. The largest 100 players in the automotive retail industry combined have about 8% market share, which is extremely abnormal. It's a very fragmented business. I think in general, in businesses where e-commerce takes hold, there tends to be a lot more consolidation. And so I think, we're incredibly well positioned for that. We've got a business that delivers great experiences to customers. It's very scalable. It's tailor-made for this moment in time. And so, we view our job as going out there and executing and continuing to deliver great experiences one at a time. And we think things will take care of themselves.
What can you tell us about the used car market right now? How weak is it? How much is that potentially helping your volume?
So the used car market in general is definitely, I think there's a couple ways to look at that. On the retail side, it's definitely soft. I mean, year over year, sales over the last several weeks, depending on what data source you're looking at, have probably been down on the order of 40%, give or take. We've been up 20 or 30 because I think we have benefited from these trends of customers moving online. If you look at pricing in the wholesale markets, used car prices are down on the order of 12%. I believe by most measures, April was the largest decrease in used car values that's ever been seen. So there's obviously dramatic impacts happening across the industry. And we're trying to do our best to make sure that we take advantage of that, buy cars at lower prices, and then deliver them to customers at lower prices as well.
What typically happens with that market in recession?
So generally speaking, what we've seen, if we use 2008 and 2009 as kind of a map, we saw new car sales drop by approximately a third. We saw used car sales drop by probably about half of that. And I think that happens because there's generally substitution away from new and into used. This has been obviously a much more dramatic event that's happened much, much more quickly and has also impacted supply chains. And so I think potentially this could be a more dramatic event across the board, although we are seeing signs of pretty steady recovery over the last couple of weeks. So it's hard to say exactly how this will play out.